how did you manage to build trust so quickly with such a wide consumer base, 12 million plus, as well as all of the brands? How did you get the brands to trust that you're going to be good for getting the funding, right?
Yeah.
And then also, how did you get consumers to feel comfortable with sharing their KYC data, etc.?
So yeah, maybe just show of hands who has used Tabby, who knows Tabby over here in the market. Okay, great.
Oh, wow.
So I don't need to explain too much, but essentially for those who don't know, we're a buy now, pay later business. We work with merchants online and offline to provide their customers with flexible payments at the time of checkout. And so basically you're buying something for $100, you're able to split that purchase into 4 equal installments, fully funded by the merchant. So you pay nothing extra. You pay that $100 over 3 months, and you're able to buy that item immediately. And so there's 2 sets of customers that we need to gain the trust of. One is the merchant, and one is the consumer, and both of them need to. We need to have a relationship with both of them in order to make this click. One much easier than the other in our particular case. So on the consumer side, I think for us, based on what we built so far, relatively easy. And the reason I say that is because we're giving people money, right?
Yeah.
They're going to trust you if you are giving them money. It's down to us to trust them to pay us back, right? And so a lot of what we do and a lot of the the kind of deep insights of the business and the work that we do at the business is how do you underwrite consumers to be able to give them loans, because you could easily get wiped out if you're giving money to the wrong customers. So on the consumer side, relatively straightforward. Again, that initial interaction that you have with the customer is based on you giving them money, and so there you've already kind of embedded that trust within that relationship early on. On the merchant side, very different, right? Because now we owe them money, as opposed to the way they typically operate, which is they work with a payment gateway. That payment gateway holds their funds for a very short period of time, and then passes those funds over. We need to convince these merchants that we're going to hold those funds for a period of time. We're good for those funds because we're collecting from these customers, and we're not going to get wiped out. And that is a lot more difficult. And so the way we did it was really just around building relationships with brand names in the early days. We really went. It was very much a collection of logos in the early days, and how can we get the best logos in the market to trust us, and then everybody follows on from there. And those were very much down to just as much as we can do personal selling, right? You're having to tell a story of what we can do, the types of investors that we've brought on board, the type of work that we do internally, in order to build that relationship with them. But it's not easy for sure.
Yeah. Well, congratulations. And I know also, if I understand this correctly, if I remember from one of our conversations, is default rates of buy now, pay later in the region is amongst the lowest in the world. And I want to dive into the investor side of it.
Mm-hmm.
How did you gather the courage, right? You as Hosam, as the founder, to go solve this problem, which is an incredibly capital-intensive business to build, right? And knowing that over the last 3 to 4 years, we've had some months or even a couple of years when the capital environment has been a bit challenging. How did you gather that courage and maintain that conviction that you're going to be making it happen and continue funding the business, because it's the main fuel behind it?
So a point on this is when in our early days as a startup, the juice of this business, really the fuel that keeps it going, is that funding capital, that capital, because without it we just can't grow. And so one of the ways as well that we convinced these merchants to work with us is we had to raise more equity than we wanted, right? So that's problematic, because essentially what we're doing is diluting ourselves very early when the business or the operations of the business don't necessarily require it, right? So we're taking on additional dilution at a very early stage in order to prove a point with the merchants.
Got it.
And to show them that we're capitalized sufficiently to be able to work with them. Ideally, you don't do that. Ideally, you're going out and raising debt in the early days, and that's a much cheaper form of capital. The challenge is who's going to give you debt when you're just starting up. So it's a decision that we needed to make in the early days of the only way to win this is to go out, raise a lot more capital than we need, take that hit in the early days, and then try to make it up over the long term. And I think that paid off, right? We went out, we raised a ton of capital through early stage investors at a time which, looking back now, obviously was a lot easier to raise. That was 2020, 2021. I think had we gone out to try to raise that capital in 22, it would have been a very different challenge.
So people who talk about you behind your back, and I don't know if I've coined that term or someone else has, the super unicorn, right? Being the fastest company to achieve unicorn status in the region. What's Hosam's secret sauce to the speed of execution? And if we may draw that parallel into culture. So how did you form the culture at Tabby, not only beyond Hosam, to have that speed of execution?
Yeah, so honestly, I think this is where I start to get a bit uncomfortable, right? And the reason being, we don't like to look at it that way. We were very, very clear, and the number one message that we had internally when we did become a unicorn is let's not call ourselves a unicorn. Because a lot of things just change when you get that comfortable, where you could become complacent, you become arrogant, you lose that humility that allowed us to get to where we were. And so we were very, very clear is while the market may want to refer to us as a unicorn, let's make sure that we don't go there ourselves. But how did we scale quickly? I think it comes down to the fact that we were building something that clearly customers wanted in this market. Buy now, pay later all over the world had its very strong initial heydays, right? Most buy now, pay later companies scaled very, very quickly in a very short period of time, and then they hit a brick wall, and very few survived.
So if you were to list either 1, 2, 3 challenges, early days versus today.
So early days we were building something from scratch in a market where there really wasn't much going on in the fintech space, right? Very early fintech, there wasn't many scale-ups, and so for us, it was constantly having to sell to investors the fact that there was a sizable opportunity in this market. It wasn't straightforward, and they just didn't buy it. So time and time again, we'd have discussions with investors, years apart, where every year they'd come back and say, "Wow, clearly there is scale in this market, but it looks like we've hit that scale. It doesn't look like there is much more in this market beyond where you guys have achieved." And it's constantly having to go back and convince them that there is a real opportunity and a real scale in this market. As we've scaled, the bigger challenges right now become around how do you maintain your agility and just your flexibility and the startup culture that allowed us to get here in our next stage of growth without losing it, right? So we're going to have to instill a lot more process, and at the end of the day, this is financial services, so it's highly, highly regulated. How do you bring in that level of compliance and regs and so on into a business without losing touch with what got us here in the first place? And I don't think we cracked that yet. I think we're trying to crack that. We're trying to, I think we want to remain very honest with ourselves to just keep our eyes on the ball to make sure that we don't go there, right? We don't lose that touch that we had that allowed us to get where we got to.
What's next for Tabby that you feel comfortable sharing? And what do you think is next for the fintech space in general within the AI context that we're looking at today?
What's next for Tabby? For us, what we've built so far, as I mentioned, is we're very much a single product company. Right? We've done a couple of additional smaller products here and there, but at the end of the day, we're largely a buy now, pay later business. And what's next for Tabby is how do we go from being a single product company to a multi-product company? And multi-product for us is really around financial services. And so how do we start to offer our customers everything that they need in their everyday financial relationships that they today have, or their needs beyond just buy now, pay later. So we started off with credit. Consumers also want to be able to spend outside of credit. So do we give them a debit card? Do we allow them to store funds with us? Do we allow them to invest? Do we give them the opportunity to transfer and remit to their families and things like that? So that's what really excites us. And what's really exciting there is, and this is how we're trying to as well instill a lot more energy in the business, is up until today, we've really had to compete with other startups, where we go out against the regular names in the market to build out a business. From here on out, we're really going head to head with the big boys. We're going head to head with the banks, the banks both regionally and the banks globally that are coming into the market. And so we become, all of a sudden, we're playing this David versus Goliath role. We're David, and while that's scary, it's very, very exciting for all of us, and I think something new for the entire business to strive towards.